legit. Anything you want.
This is why silver prices could hit $30, $35 an ounce soon. Massive supply and demand disparity calls for soaring silver prices. If you are looking for the next big trade, then don't overlook silver prices. The gray precious metal could be selling for a massive discount and presenting the opportunity of a lifetime. Understand that the fundamentals of the silver market are improving in favor of the bulls, and they suggest that the silver price could surge. There are supply issues in the silver market. Production is in a slump. Consider U.S. silver production. In the first 3 months, silver mine production amounted to 217,000 kilograms. In the same period a year ago, silver mine production was 274,000 kilograms. Simple math, silver production declined by about 21% year-over-year. No matter how you look at it, this is an outright collapse in production. Other silver-producing regions are reporting declines as well. For example, in Canada, in the first 4 months of 2018, silver production amounted to 125,799 kilograms, about 3% lower than the same period a year ago. But don't just get fixated on the US and Canada's silver production. This phenomenon prevails on a global level. In 2015, global silver mine output was 895.1 million ounces. In 2017, mine production dropped to 852.1 million ounces. This represents a decline of close to 5%. Going forward, you can expect silver production to decline further. At the current silver prices, it's very difficult for a silver miner to ramp up production. Their costs are way too high and they haven't spent much on exploration either. Silver demand side remains strong. Just look at India. As for demand, it's solid, to say the least. Look at India. The country is building up an appetite for silver and it shouldn't be ignored. In May, the country imported $445.02 million worth of silver. We have been following silver import figures from India closely. They have improved significantly over the last 1 year. In fact, it wouldn't be wrong to say that Indian consumers' hunger for silver is much more than their hunger gold. Also, keep in mind that silver isn't just a precious metal. It's used in various industries as well. For instance, you really can't have solar energy without silver. And demand for solar panels around the world is increasing. The iPhone contains several grams of silver and so do other cell phones. Silver prices outlook. A rapid move to the upside could be ahead. Dear reader, I have said several times before in these pages and repeat myself now, what has happened to the silver market in the past few years has been a blessing in disguise. The silver market has moved immensely in favor of the bulls, but the silver prices are not reflecting this just yet. There's a massive supply and demand disparity, which calls for a rapid move to the upside. I will end with this: the longer the silver market remains ignored, the bigger the move we will see in silver prices. I truly believe conditions are ripe for $30.00, $35.00 an ounce. Silver prices sooner than later. If silver prices are able to break above those levels, don't be shocked to see $50.00 an ounce silver. Silver to climb 11% in next 3 months. German-based research firm Silver is likely to reach $18.50 an ounce in third quarter of 2018, and maybe even hit 2016 highs of $21.50 an ounce by the fourth quarter, based on a combination of technical, sentiment, seasonal, and fundamental factors. The white metal is undervalued at current price levels and is expected to become one of the best performing assets, making it an ideal contrarian investment, according to Florian Grums, analyst at Midas Touch Consulting in a recent report. He added that despite gold's recent plunge, silver still has a lot of room to catch up with the yellow metal. In his latest report, Grums said, especially as I expect a breakout in gold above $1,350, silver has a lot of room to catch up with gold. The gold-silver ratio still trades just shy below 80 and remains far away from its long-term mean of around 65-67. Grums said that extremely low volatility in silver prices indicates a market where neither speculation nor mainstream interest is apparent. Silver has been trading sideways the past 3 months. Technical analysis indicates that it has been trading in the narrowest range since 2002 when looking at Bollinger Bands, which could indicate a return of volatility soon, said Grums. Arguably this means that sooner or later volatility will come back into the silver market and we will likely witness a strong move, the report said. Looking at traders' sentiment, Grums sees the latest Commitment of Traders report numbers as bullish. As of May 29, the cumulated commercial short positions was 35,297 contracts when silver closed at $16.36 an ounce. Usually a perfect contrarian setup is found when commercial hedgers hold less than 10,000 short contracts in the silver futures market. With the current 35,297 short contracts, a final sell-off in silver is still possible in the coming weeks, he said. Grums added that historically, summer period has played in silver's favor. Usually during the extremely weak month of June, silver often experiences dramatic sell-offs followed by a powerful surge into the summer months between July and September, according to the report. On the fundamental side, Grums anticipates that silver's long-term price growth will be driven by industrial demand, as retail consumption, particularly in coins and bars, has shown steady weakness since 2017. At least increased consumption from industrial production, jewelry production and silverware offset an even stronger decline in demand, he said. Silver consumption of bars and coins fell to a 10-year low in 2017, contributing to a 5% decline in overall consumption last year. While global silver production in 2017 also fell by 2.7%, the larger relative fall in consumption may be the reason for flatlining silver prices from a purely demand-supply perspective. Silver market could still hit $21 an ounce, although silver has struggled to gain momentum so far this year. One major precious metals firm is not giving up on the metal as it sees growth potential coming from industrial demand. In a report released Tuesday, Maria Smirnova, a senior portfolio manager at Sprott Asset Management, said she remains optimistic that silver can eventually regain its luster, rising to $21 an ounce. From current prices, Smirnova's forecast target represents a gain of 26%. July silver futures settled Wednesday's session at $16.694 an ounce, up almost 1% on the day. One significant factor behind Sprott's bullish outlook is the expectation that industrial demand, as the world embraces clean energy and electrification of the auto sector, will be expected to grow. While silver supply stagnates, we believe demand is underpinned by synchronized global economic growth and an uptick in industrial demand, she said. Silver can thank the high-tech auto industry, which both reflects and is driving a global shift toward electrification powered by solar technology. The analyst noted that the auto sector silver demand grew 5% last year while solar power consumption increased 19%. Looking ahead, Smirnova said that auto demand is expected to grow as technology advances. With more technology, the more silver you'll see in the cars, particularly in the tools that protect riders, she said. For example, silver is a component in operating collision avoidance systems, like cameras and sensors. If there's suddenly a mass market need for these automated features, then automakers will likely require more silver. Smirnova added that she also sees the potential for silver to rally in the near term as there is a clear bearish sentiment in the marketplace with trade data showing a high level of short positions. The latest trade data from the Commodity Futures Trading Commission revealed that the market had a small net long position of 791 contracts. When short interests are high, there's the possibility of short covering. Short investors forced by a rising price to buy silver to cover their positions and cut their losses. This, of course, further drives the price up, she said in her report.